Hello there, folks. Welcome into this video here. Interesting one. A lot of dynamics going on in the stock market right now that a lot of people aren't familiar with. And you might think like everything kind of has to be fundamental based in the stock market, right? Like, oh, company earnings are going up, therefore the market has to go up, or company earnings are going down, so the market has to go down. I wish it was like that. I wish it was a perfect world and everything made sense. But many times in the stock market, things happen, things transpire, the market reacts to certain things, certain ways that not a lot of people understand, and they try to like put the pieces together and like, well, why is this thing happening but yet the market's going up, and this thing's happening, shouldn't this mean the market goes down and goes up, things like that. Okay, and so I want to react to this clip here, which I was sent from a friend from its Instagram, the Compound News, and I think it's an important one because the points he makes here and kind of putting all these pieces together, you know, you look at the market right now and you know, everybody's wondering, this is a NASDAQ just this year to date, people are wondering like, you know, we went straight down a straight line, came up. Went straight down a straight line, came up. And are now we're just going to go to lower lows now, essentially. And the amount of times I've heard the term bear market rally in the past few weeks. Oh my gosh, if I had $1 for every time I heard bear market rally last few weeks, I think I would have more money than Warren Buffett. It's just been absolutely insane. And a lot of people are looking at things, and this is something I showed in a video on the main channel recently, where, you know, if you just look at the last few years, it's been a very, I would say, traumatizing time for a lot of investors in the market, because you went into 2020 feeling confident, and then you had Rona come out of nowhere and, you know, knock off everything. Then things started come back way faster than anybody had ever anticipated. It was incredible, including company earnings, not just the stock market coming back, but to be quite frank, company earnings came back way stronger than anyone had anticipated. It was insane, right? Then going into this year, a lot of excitement. Oh, we're reopening the economy for real. You know, Rona's taken to the backdrop now. This is going to be a great year, and all we got was kind of a pie thrown in our face. Then the market's come back recently, and you know, a lot of people are figuring this isn't real, and we're going to fall back down. And so, yeah, I hope you guys enjoy this as always. By the way, I think we're literally going to hit 7,000 subscribers within the next few hours. So I appreciate you guys joining me on the channel, the new channel, the reaction channel. Much love as always, and let me know your opinion on what this gentleman states here in this, and let me know if you've ever also heard of this the compound before.
I think that having an intense debate over whether it's a bear market rally, not a bear market rally, I don't see how that's productive. And I say that with the sincerity of markets have a very unique way of leading sentiment, of leading positioning. And I think exactly what has unfolded here since the beginning of the new quarter has nothing to do with fundamentals. I get corporate earnings.
Wait, let's take a step back here, right? This kind of is like the chicken and the egg philosophy, right? Like, you know, you look at what has transpired so far this year, and you know, when it comes to sentiment, is sentiment so negative around the market? And by the way, it was insanely negative right when pretty much the market was at bottoming out in June. Was sentiment so negative because people got really negative about the economy and earnings? Or was it so negative really because people were being, let's say, brainwashed by the market activity, right? And so from what I have consistently seen, and you can look at the AII investor sentiment over time, what I have seen consistently throughout time is if the market's doing very well, guess what starts to happen? People start to feel a lot more bullish on the stock market. Who would have ever thought it, right? And if the stock market's going down a bunch, people start feeling a lot more bearish around the market. And this is why you usually see some insane numbers around bearishness hit when the market's already at pretty much lows and lows and lows, and why you get almost no one bullish on the market in a time period when, you know, you would think people would finally be turning bullish because the market is down so much. And we saw this play out in 2009, you know, right before the market turned on March 5th. Sentiment came out, 70% of investors were bearish on the market the next 6 months. The market bottoms and goes straight up in a straight line the next 6 months, essentially, right? And so recently, right here, you know, there was less than 20% of investors were bullish on the market the next 6 months. And what did we get? Massive rally, okay? So, yeah, that just kind of goes to show you, go back to the whole chicken and the egg. You know, what came first, the chicken or the egg, man? And it's very, very confusing. Let's just put it that way. But what I've seen is this baby drives how people feel about many various things in the economy.
Resilient. Understand. I get that we're seeing a moderation in inflation. Guess what? That's what the Federal Reserve has to do. Combat inflation, you have to you have to have demand destruction. You have to have an economic contraction. That's the price you pay, and they can't stop. This is about technicals. This is about positioning. This goes back to, in the month of June, you look at risk and you understand that allocators of risk were positioned like it was 2008.
Yeah.
But there was one problem. Where was Lehman Brothers? I didn't see Lehman Brothers. So now what's unfolded.
That's a great point before we get into the rest of this here. That's a great point because, I mean, everybody had just sold off stocks so dang heavy in order to continue the market to go down from there. And all of a sudden, because here the market was down 34, 35%, the NASDAQ I'm talking about specifically, right? In order to get this market down 40, 50% now, you need, like he said, you need a Lehman Brothers type situation. You need something epic, colossal, game-changingly bad that shocks everybody. What I call a shock and awe event. Without shock and awe events, you are not going to get a market down 40, 50 type percentage, okay? Like we did in the Great Financial Crisis. You need shock and awe. That's what we had in the Great Financial Crisis. And if we're talking about we're going to get this baby down 50% or so, you need epic things to happen that everybody's just like, I can't believe it has gotten this bad. That's how you get a NASDAQ down 50%.
Hold on. We have this. Throw this up. This is the Bank of America Global Fund Manager Survey. So it's exactly right.
Okay, so look at this here. So net percent taking higher than normal risk. And look at this just in July, right? No one is taking risk out there, right? No one. This is a Bank of America Global Fund Manager Survey. So this isn't retail investors. This is, let's call it Wall Street money, okay? Wall Street money, none of them want to take risk at all right now. At all. They are like, nope, I'm good. Thank you very much. I am quite all right. Which means they are convinced the economy is going to get worse, earnings are going to get worse, everything across the board, essentially. And that's just very interesting to kind of see that. We're at that moment in time, which is crazy because this is lower right now, or at least in July, it was lower than, because it could have changed a little bit here in August. But in July, it was lower than October 2008, which shows you how pessimistic the Wall Streeters have gone on the market now at this point in time. That is shocking. That's the best way I can put it. Shocking that it's gotten that negative. We are in that moment in the market right now. My gosh. I mean, way more pessimistic than even in March of 2020, which is crazy because think about it. In March of 2020, we were closing down the economy. I mean, we were talking about companies going bankrupt. I mean, it was the end of everything, right? I mean, that's just crazy to think like right now. That's nuts, man. That's absolutely nuts. But one thing I'll say, guess what? Every single one of these time periods that you saw sentiment go that negative, buy like it's nobody's business. Maybe this is a one time that's different, but every single one of these times, Ronnie Rana should have bought like crazy. December 2018 should have bought like crazy. 2016 should have bought like crazy. 2012, 2011-ish dip here. Should have bought like crazy. 2008, October 2008, you should have been buying like crazy. 2003, you should have bought like crazy. You can go back to all these time periods over the past 20 years or so. Man, every single time, you should have been buying like crazy. Maybe this is the one time that's different, right? And, a year from now, it's even way worse. The markets are way worse. Or 2 years from now, it's way worse. But, generally speaking, it's a pretty good buy indicator. Let's just put it that way. At least traditionally. Maybe this is the one time it's different, but traditionally it is.
This is the net percentage of people taking higher than normal risk. It bottomed out at negative 60. I don't know what that scale means, but it had not been that bad sentiment. You had to go back to October 08.
A remarkable chart.
Yeah.
A remarkable chart. And you're missing the financial market imbalance that Lehman Brothers created. So what happens in that environment? What happens in that environment is that you understand that a large component, and this is, for the both of you, I love how people are so appreciative of technicals when they align to your story.
Yeah, that's me.
But when it does, and I'm with you. But when it doesn't align to your story, no. The technicals are fraudulent.
Pay no attention to that.
They're sending a message in the market that doesn't matter. Well, okay, I'm sitting there, I'm watching all this. I'm saying to myself, you know what's going to happen here? All these non-discretionary, rules-based funds that remove emotion, that have been telling me for the last 10 years, the best thing you could do behaviorally investing is do what? Remove emotion, okay?
In this economy?
So they're doing what they're supposed to be doing, right? The S&P breaks above the 50-day moving average. Engage.
Right.
That's what happens.
Right.
I know how quant funds work. Now the S&P sustains above the 50-day moving
Even more
average.
jump in.
Engage even more. Oh, guess what? We now see in our vision the 100-day moving average. We're going to be engaging more. Now, all of this is unfolding as the street is underweight the strategy that has paid all of us in abundance, okay, for the past 14 years. What's the strategy? Growth, right? Everyone's underweight growth.
Yeah.
Underweight growth, underweight long duration assets.
In the second quarter, that's how you spent your time, getting growth out of your portfolio.
So what comes back now? Growth obviously comes.
Yeah, and I mean, when we talk about this drop, we had is, all the way to mid-June, that was it was selling out of almost everything, but specifically, really, it was growth. Like he said, look at anything growth related. Those stocks fell 60, 70, 80%. And I'm not just talking about the risky plays. I'm talking about even like companies like PayPal and Shopify, like real big companies. I'm talking Meta, these companies that are profitable, that are great companies that are going to have much bigger businesses 5 years from now than they do today. Those companies just got absolutely obliterated. Anything growth related, people went out, and it just kind of shows you how bearish the market gets when it just throws everything out. Netflix, it doesn't matter. Your growth, you're gone. That's the way they treat it. Your growth, you're gone. And, ultimately it's going to be a failure, because every single time, what do people want to own? Growth. As soon as this little mess of scariness is over, what do you think everybody's going to want to own? Growth. People want Netflix, people want PayPal, people want Shopify, people want all these growth stocks. There's in the short term, sometimes they go out of these and they flood out of them like they are obviously right now or have been this year. But guess what? As soon as the coast is a little bit clear, money's going to come flooding back to those as it does every single time. It's the way it works, man, because that's where you're going to get the big returns, and that's what they start to realize. And it's just like a pile-on effect that takes a little bit to kind of put together there.
I don't know, Josh, what's growth? 40% of the S&P 500, if not more, 45%?
Yeah, more.
So how is the S&P not going to rally in that environment, eradicating, you need to take that?
No.
Eradicating the pessimism, reversing the overwhelmingly bearish sentiment, and the 200, I don't think it's over because you have the 200-day moving average sitting so close.
Yeah.
Those non-discretionary funds, they're going to be buyers above that 200-day moving average. And here's the last point on that. What also is going to happen is when you study momentum usually observes a time frame of 6 and 12 months. So if you go back 6 and 12 months, if you take the S&P 500 and you have it just kind of rest at 43, 4,400, do you know momentum looks positive on a 6-month basis and a 12-month basis at that point?
Really?
Wild.
That's for the very first time. So you're engaging these rules-based funds,
which are
that
so big,
don't pay attention to emotion. Right. But, okay, that doesn't align with the fundamentals, so it doesn't work this time. I don't get that.
Yeah, that's a great point. And I mean, that's some high level kind of thoughts there about the market dynamics and things like that. Let me know if you guys, by the way, enjoy a clip like that. That's a little higher level stuff when we start talking about, these different funds that are kind of rules based funds, and they're supposed to do this and this and this, in order to buy and things like that. And this isn't even what a lot of people think about in the market, but I think it's good to be aware of this. Even if you're a long-term investor like myself that's buying a company because you believe it's going to go up a ton over the next 5 years, it's important to just understand what's going on in the market, what could be driving the market at different times and different forces, right? You have so many different dynamics in the market. You got the Wall Street Bet Squad, right? You got much of the market is made up of essentially programs, algorithms that are doing trading in the market, right? You got the big long-term investors, the Buffett types that are out there. You got the hedge funds. You got the actively managed funds that obviously are likely putting on a lot of selling pressure on this market in the first half of the 6 months, right? You have all the ETFs. You have the index funds, right? Which a lot of folks, obviously are always funneling money into that are, always out there buying the S&P 500 and things like that, right? There's so many different dynamics that I just think are important for folks to factor in. And then you got obviously the high net worth individual bunch that sometimes is a little more bullish, so they're flooding a little more money out there, and sometimes they're a little bearish and they're cutting back, right? And all these things ultimately shake up the market in the short term and cause a lot of fluctuations. And I think it's just important to understand kind of how these things work and the dynamics of that. So yeah, I hope you guys enjoyed this video. As always, I appreciate you joining me on the new channel. And yeah, I think we're going to hit 7,000 subscribers here very quickly. So much love as always, guys. I appreciate you, and have a great day.